order blocks, one of the most important concepts in trading. And there's a good reason for it, because of how well they actually work. However, not all order blocks are created equal. For instance, price did not respect this order block right here, and yet this order block actually did end up working. So how come this order block worked, but this one didn't? Well, in this video, I'm going to show you how to identify the correct order blocks, how to draw supply and demand zones from these order blocks, and I'll also go over what differentiates a high-quality order block from a low-quality order block. So to begin, we first have to go over what an order block actually is. Let's start with the bullish order block. You already know what a market structure break or an MSB is. After a nice downtrend, price makes the deepest lower low. The first stage of finding our order block is to find the lower high that created this lower low. As you can see, it is this one right here. Once you find this, the next stage is to spot a strong market structure break. So which price swing here caused an MSB? As you can see, it is this swing right here. So the last red candlestick that started this price swing and caused the market structure break becomes our order block. If you're confused, don't worry, we'll look at a real example. Alright, so here's the deepest lower low, and here's the lower high that created this lower low. That part is quite clear, but could you identify the order block? Hint, it is the last red candlestick that started the swing which caused the market structure break. In this instance, it will be this candlestick right here. This is our order block, and the idea is that when price comes back to this zone, we can expect the price to bounce off. Alright, let's look at the bearish order block. Firstly, identify the highest higher high. Secondly, identify the higher low that created this higher high. Thirdly, identify the price swing that broke this higher low and caused a market structure break. Finally, spot the last green candlestick that started this swing. In this example, it's this green candlestick right here. This will be our order block, and this will be our supply area. Let's see an example. Here's our highest higher high, and this is the lower high that created the higher high. So what is the swing that causes the market structure break? Hopefully, you pick this swing right here. So the green candlestick that started this swing will be our order block, this one right here. And if we extend this out, this will be our supply area. We can expect the price to react from here. Now, if you've actually tried to mark up order blocks on your chart, you'll quickly realize that it isn't this simple all the time. Oftentimes, you will find that the market structure break does not happen at once without a consolidation prior. Alright, so now tell me which swing caused the MSB. Was it number 1, number 2, or number 3? Clearly, the market structure breaks with swing number 3. So in this instance, our order block is this red candlestick. This is the candlestick that started this price swing that broke this lower high. Let's look at an example now. Here, as you can see, after making the deepest lower low, the market enters into a consolidation phase. Here's the lower high that created the lower low. There are a total of 3 swings, but can you tell me which swing causes an MSB? Does swing 1 cause it? No. How about swing 2? No. What about swing 3? Yep, swing 3 causes the MSB. So the red candlestick that initiated this swing becomes our order block. As you can see, price came back to this zone and reacted really well. Alright, so now that you know what an order block is, how exactly do we draw the supply or demand zones from these order blocks? Well, this really depends on the individual trader. For example, if the order block candle has a significantly sized body and relatively smaller wicks, I only take into account the body of the candlestick for the zone. Contrastingly, if the body is tiny but has large wicks, I take into account the wicks along with the body. Alright, so before we move on, let me address something very important. A lot of traders confuse the terms market structure break and break of structure. A break of structure is simply a term we use to describe the price breaking a higher high or a lower low. Break of structures are needed for a trend to continue being a trend. A market structure break, on the other hand, is a break of structure that ends an existing trend by breaking a lower high or a higher low. However, I've seen traders use this term interchangeably, and that is completely okay. If you think about it, a BOS is actually also an MSB, just in a lower time frame. This means that order blocks are everywhere, but the question is, which ones are actually usable? We will learn this soon, but before that, let me tell you about the simple formula. If you're like most traders, you've probably spent countless hours searching for that one profitable strategy. You watch tons of YouTube strategy videos, jump from strategy to strategy, and yet you're just unable to find that winning indicator or strategy. Well, if this sounds like you and you're wondering why this sounds familiar, it's because I used to be in the exact same place as you. And I get how horrible this feels. You waste tons of money and, worst of all, tons of time. That's why I developed the simple formula. This course explains a powerful trend-following day trading strategy for trading futures, stocks, commodities, and forex. The simple formula is easy to understand and to trade. This approach doesn't require complex trading software. Basic charting tools like TradingView is all you need. Thousands of traders have used this strategy already. Don't miss out. Click the link in the description to get instant access. Okay, so the first thing I look for to determine if an order block is valid are big pumping candlesticks with imbalances or fair value gaps. But how come? Just think about it. Would retail traders be able to move the price so aggressively like this? Surely they are unlikely to be able to, so there should be some different reason as to why price behaved this way, such as involvement of market makers, big deals, big contracts, or anything large scale. So yeah, imbalances or fair value gaps, first quality of a usable order block. The second thing I look for is the proximity of the imbalance to the order block. Let's take these two examples. In example 1, the fair value gap is formed in the swing that causes the MSB, but it isn't exactly right next to each other. On the other hand, in the second example, the fair value gap is formed right next to the order block candle. This is what we are looking for. The closer the imbalance candles are to the order block, the stronger the order block is. In fact, if the imbalance and the order block are so close to each other that they overlap like this zone becomes a very strong area for price. The third thing I look for is a quality MSB. So what do I mean by quality? Well, ideally, you'd want to see the price break the previous structure in one big sweeping swing. For example, here you could see that price entered a bit of a consolidation phase before finally breaking the lower high with this order block right here. This, in my opinion, a weak order block. However, in this second example, you could see that the price broke the structure in one big swing. No consolidation, just one swing from the lower low. This is a very strong order block, and the zone it creates in turn becomes a very strong demand zone. The fourth thing I look for is if the order block candlestick marks the end of a clear trend. Let me explain. In this example, you could see that price is in a downtrend. However, it's not a strong downtrend characterized by clear lower highs and lower lows. If someone was to mark the lower highs and lower lows of this trend, they'd be very confused. Instead, what we're looking for is a clear trend with well-distinguished structures. When a market structure break happens putting a trend like this to an end, it creates a very strong order block. The fifth thing I look for is a steady pullback to the demand zone. Now, this isn't exactly a quality of the order block itself, but rather a quality of the trading setup. But nevertheless, it's important. You want the price to reach the order block in a steady and controlled manner. If the descent to the order block zone is aggressive like this is a bad sign, and you should stay clear of this trade. However, note how I said steady and not slow. Very important difference. Sure, price needs to reach the order block steadily, but that doesn't necessarily mean slowly. In fact, what I found in my backtesting is in instances where price took a very long time to reach the zone, the order block ended up not working. So ideally, you'd want a steady descent or ascent to the order block. Nothing too drastic or too slow. The sixth and the final thing I look for is an unmitigated zone. Oftentimes, the price would visit the supply or demand zone more than once. What I found is that the first test back to the order block has the best reaction. Subsequent tests can be weaker and less reliable. Alright, so keeping what we've learned so far in mind, let's create our ideal super order block. 1. First step is to look for an MSB with big pumping candles with fair value gaps. 2. Second step is to look for proximity of the fair value gaps to the order block candlestick. We want them to be as close to each other as possible. 3. Third step is to ensure that the MSB happens with one big sweep rather than through a series of prior consolidations, such as in here. 4. Fourth step is to ensure that the trend the MSB ended has clear and distinguished structures, in other words, a clear trend. 5. Fifth step is to ensure that price reaches the zone in a steady manner, not erratically impulsive, nor too slow. 6. Sixth step is to ensure that you're trading the first test of this zone. If you missed the first step for some reason, avoid trading the retest of this zone as the zone is already mitigated and is now weaker. As you can see, the price reacted from this zone very well, and we had the perfect trade. If you want to see more videos like this on price action and smart money concepts, hit the subscribe button and leave a like on this video. See y'all in the next one.